Hi traders, and welcome to the third video of the Impact Strategy. In this video we will explain the concepts of role reversals. To understand role reversals, we need to understand the basic support and resistance. Luckily we already saw this in the course. Support is the floor and resistance is the ceiling. We are supposed to buy at support in an uptrend and sell at resistance in a downtrend. A role reversal occurs when a price level, once seen as support, is broken and then changes to an area of resistance. The zone is basically reversing its role. Now let's assume that traders are divided in three categories. Those who are long, those who are short, and those yet to decide what their next move is gonna be. Let's say the market moves higher from a specific support level. If someone buys at that support level, they're probably delighted, but at the same time they regret their decision of not buying more at that support level. So when the market dips back to that support level, they could buy more. Those who went short suspect that they are on the wrong side of the market and are hoping for a dip close to that area that they sold to get out at a break even. The undecided team realizes that the market is going higher and they are willing to buy at the next good buying opportunity. So actually they are all determined to buy the next market dip. The reason why role reversals work so well is because of that psychological aspect. Some basic rules are: the more it holds, the tougher to break, which means the more often price tests a level of resistance or support without breaking it, the stronger the area will be. Now what is a role reversal? When price breaks above a resistance level, it's common to see that level change its role and become a new area of support. The same goes the other way around. It's undeniable that it's a repeatable pattern in the market. But be careful when working with support and resistance zones. Don't identify too many levels. Focus on those that are obvious. Now let's go to the charts. Now role reversals are a very common pattern. It's found on most charts and it's really very simple. The reason why we use it is because we want a strategy that is repeatable, so we can extract consistent profits out of the market. Now role reversals happen over and over again. Let me show you. All we need to do is identify an area of resistance, as you can see here. This is an area where sellers are taking over and pushed price down. All we need to do now is draw a horizontal level at the high, extend it to the right and use it as a reference point later in time. And as you can see, price came back to that zone and changed the role of that zone. It changed from being a resistance zone to being a support zone. When sellers pushed price back down to that level, they created a swing high by doing so. So the next thing we need to do as trend traders is mark that high with a zone and extend it to the right. Now as we can see here, price moved up from that previous support level because buyers were waiting for price to come back to that level. Don't forget to look at the candles at these levels. Our new high got broken, and as you can see, it happened with a very big candle. Remember this, it's better to have a level broken by a candle like this than by some small candles. We can see the same thing with the previous role reversal. Quick question, where does our bullish integrity lies after this break? At our previous low. Easy. So as long as price doesn't break it, we are still good. Now don't expect price to always come back and create a role reversal. As we can see here, buyers were so aggressive that they didn't really come back. Unless you want to count this small candle as a role reversal, but we're not gonna do that. We prefer price to take some time before going for the role reversal. If we move on, marking up the next swing high with a zone, we clearly see a role reversal happening again. Most of the time, price will test that structural break more than once, and we can see that very clear here. Please remember, this is just one of the building blocks of our strategy. We know it's already quite strong on its own, but we want high probability trade setups, and role reversals alone won't cut it. Now here we have another high that we can mark, but no immediate role reversal. What we can see is price starts ranging. But if we keep extending our zone to the right, suddenly we see that the zone is acting as support, and we can treat it just the same as the other role reversals and buy at the zone. Would it have worked out? Yes, until we reached the top of the range. Now price not being able to break these highs is concerning for us trend traders. It tells us that we should be cautious and less aggressive. When we had a third strong rejection, price broke the low end of the range and changed the role of that support into resistance. And now we have a downtrend. Now, before creating that previous role reversal, price left a low. We can mark that low with a zone, and as we can see, it got tested a few times before breaking to the downside. Then we got another small role reversal, and this kind of stuff keeps happening again and again. I hope everything about role reversals is now clear, so let's move on to the next part. Thanks for watching, and we'll see you in the next video. Bye.